Most traders wait for one big trade to change everything. They imagine the trade that grows the account, proves they were right, and finally makes all the waiting feel worth it. But in real trading, the trader is usually not built by the big win. He is built much earlier, in the small moments that almost nobody sees. A patient trader is built when he skips a setup that almost looks good, but does not fully match the plan. He is built when he accepts a planned loss instead of moving the stop and hoping. He is built when he closes the platform because he knows the next click would come from frustration, not from discipline. These moments do not look exciting. Nobody screenshots the trade they did not take. Nobody celebrates the loss they accepted correctly. Nobody sees the moment when a trader walks away from the screen before emotion takes over. But these small wins train the most important skill in trading: control under pressure. That is the direct answer to this video. Small wins build patient traders because every small, correct decision teaches the mind one lesson. I can follow the plan, even when emotion wants something else. And in trading, that lesson matters more than one lucky win because the market does not only test your strategy, it tests the person pressing the button. The first small win happens before the trade is even opened. Price starts moving, candles begin to form, and the chart gives you just enough reason to stay interested. Maybe price breaks a level, maybe it pulls back toward a zone, maybe the move looks like it could continue. But something is still missing. The confirmation is not clean. The entry is a little late. The risk is not as good as it should be. This is where many traders make the first mistake. Not because the setup is obviously terrible, but because it is almost good. Almost good is dangerous because it gives the mind enough material to negotiate. The trader starts thinking, maybe this is enough. Maybe I am being too strict. Maybe this move will leave without me. At that moment, the decision is no longer only about the chart. It is also about the discomfort of doing nothing. A patient trader wins this moment by keeping the question simple. Is this my trade? Not, can this trade work? Because almost any trade can work sometimes. Not, can I find a reason to enter? Because the mind can always find one more reason when it wants action. The real question is whether the setup matches the standard before the result is known. If the answer is no, skipping is the win. The account may not grow in that moment, but the process is protected. The trader has just proved that he does not need to turn every market movement into a decision. That matters because discipline is much easier to protect before a bad trade begins than after emotion has already pulled the trader inside it. But skipping weak setups is only the first test. The next test comes when the trader has already entered. The market moves against him, and now he must decide whether the rule is stronger than the need to be right. The second small win is accepting a planned loss while it is still small. This is hard because a loss does not always feel like a normal business cost when you are inside it. It can feel personal. It can feel like the market is proving you wrong. And once that feeling appears, the mind starts looking for ways to avoid the pain. That is when the dangerous negotiation begins. The trader moves the stop a little lower. He says he is giving the trade more room, but often he is only giving his ego more time. He checks another time frame, looks for new confirmation, and starts building a new story around a trade that was already invalid. A small planned loss becomes a bigger emotional problem. A patient trader sees the stop loss differently. The stop is not punishment, it is protection. It is the line that keeps one wrong trade from becoming a larger mistake. When he accepts the loss according to plan, he is not only protecting money, he is protecting the next decision because he does not carry a broken rule into the next setup. This is one of the most important small wins because it proves that the trader can be wrong without losing control. He does not need to fight the market. He does not need to recover immediately. He does not need the next trade to fix his ego. The loss is accepted, the rule is respected, and the mind stays clean enough to continue. Many traders are not destroyed by one small loss. They are damaged by the reaction after the loss. One refusal to accept reality becomes frustration. Frustration becomes revenge. Revenge becomes another trade that should never have happened. So accepting the small loss is not weakness. It stops the chain before it grows. But even after the loss is accepted, another danger can appear. The platform is still open, the candles are still moving, and the trader may feel that one more click can fix the day. The third small win is knowing when to stop. There are moments when the platform is still open, but the trader is no longer in the right state to make decisions. Maybe he missed a clean move and now every candle feels like pressure. Maybe he just took a loss and wants to feel better. Maybe he is bored, tired, irritated, or desperate to make the day productive. This is where the next trade may look like analysis from the outside, but inside it is only emotion looking for relief. The chart has not created a better opportunity. The trader simply wants to remove the uncomfortable feeling, and that is one of the most expensive reasons to click. Closing the platform can be a real trading skill. Many traders think discipline means staying longer, watching harder, and forcing themselves to find something. But the market does not reward screen time. It does not pay because you stared at the chart for 5 hours. It only rewards good decisions taken under the right conditions. When there is no setup, no trade is the correct decision. When the mind is noisy, no trade is the correct decision. When the trader is only looking for action, stopping is not quitting. It is protecting the account from the version of himself that is most likely to make a mistake. This small win protects tomorrow. One unnecessary trade can ruin more than one position. It can ruin the next hour, the next decision, sometimes the whole day. Closing the platform before that happens may look boring, but it shows that the trader is learning to choose control before damage appears. And now, the pattern becomes clear. The skipped setup protects the entry. The accepted loss protects the rule. The closed platform protects the mind. These are different moments, but they are building the same person. A trader who does not need emotion to decide what happens next. The real power of small wins is that they create evidence. Every time you skip a weak setup, you create evidence that you can wait. Every time you accept a planned loss, you create evidence that you can respect risk. Every time you stop trading before emotion takes over, you create evidence that your rules are stronger than your impulse. At first, this evidence feels small. One clean decision does not change everything. One disciplined day does not make someone professional, but the mind learns through repetition. After enough small wins, discipline stops being only something you want. It becomes something you have already practiced. This is where identity begins to change. The trader no longer only says, "I want to be patient." He starts to see proof that he can behave patiently. He has skipped trades before. He has accepted losses before. He has closed the platform before. So when pressure returns, he is not starting from zero. He has evidence from his own behavior. That is why small wins matter before the big moments arrive. Big pressure does not create discipline from nothing. It reveals what has already been trained. If a trader practices impulse every day, pressure will expose impulse. If a trader practices small disciplined decisions every day, pressure has something stronger to meet. Small wins build patient traders because they train the trader before the big test comes. They are not impressive from the outside, but inside the trader they build control, trust, and emotional strength. The skipped setup, the accepted loss, the closed platform, the honest journal entry, the rule that followed when nobody would know if it was broken. These are the bricks. A patient trader is not emotionless. He still feels FOMO when price moves without him. He still feels frustration after a loss. He still feels the urge to click when the market becomes exciting. The difference is that he has practiced enough small wins to know that emotion does not need to become action. That is the real meaning of patience in trading. Patience is not silence. It is not weakness. It is not sitting in the corner doing nothing. Patience is the ability to feel pressure and still choose the correct action. Sometimes that action is entering. Sometimes it is waiting. Sometimes it is accepting the loss. Sometimes it is closing the platform and protecting the next decision. A big winning trade can make someone feel like a trader for one day, but small wins repeated over time build the person who can keep trading after the excitement is gone. They build the trader who does not need to chase every move, fight every loss, or prove himself every day. So do not underestimate the small moments. The trade you skip may protect your discipline. The loss you accept may protect your account. The platform you close may protect tomorrow's clarity. These wins may not look big today, but they build the trader who can survive tomorrow. Because a patient trader is not built by one big win, he is built by small wins repeated when nobody is watching. If you like this video, please like, comment, or subscribe to The Patient Trader.